What's up guys, and welcome back to another video on my channel. And today, as you can already see it in the title, we will talk about the smart money and the dump money. But not only that, there are also other topics I want to show you and I want to give you an update about, like the buyer index, also Nasdaq data I want to show you. Then I also want to show you something in terms of invasions and wars. But before we are starting the video, let me apologize for being this inactive on YouTube for the last weeks, and probably this is also continuing for a couple of more weeks. But this is going to change again, likely in 1 month, but I don't want to dive right now in this topic. I will explain all of that in 1 month when the time is there. Until that point, I'm trying to post an update on YouTube from time to time. You know, on Patreon I can make it, I can almost post daily there. And right now I would say let's get straight into the video and let's start to cover the topics. And I would say let's start right here with the Bitcoin price chart. Of course we could also take a look into other cryptos, but they are all pretty much looking like this right here. So we had a nice pump and right now we have almost lost it all again, so that is not looking that nice. We can also see that right here in the stock market that we also had a nice pump and then some ups and downs right here the last 2 days. So Thursday and Friday we also had red days right here. So that's not exactly like the crypto market, but pretty similar. We can see an uncertain situation right now in the market, and I would say let's get into the market data. Let's take a look into the smart money confidence right here. You can see this one right here is the SPX, so the S&P 500, that's the price. And here the blue lines that you are seeing, or the blue line, that is the, you can see it also right here, the smart money confidence. Currently we are here at 0.75, and that is a level here you can see on after the COVID crash we were at 0.76, so one tick higher than we are right now. And then we also were at these levels, so at 0.79 on the 31st of August 2015. Then we also have one right here that is on the 31st of January 2014. There we are, or there we were at the exact same level where we are right now. So you can see in the last 10 years we had 4 times where we were at these levels, and 1 time is right now. And then of course we also have the opposite right here, that is the dump money confidence. You can see this is very low right here. We also have like 1, 2, 3, 4 times in the last 10 years where we were at these levels. Of course the last time was also after the COVID crash. This one right here is in 2018 and in 2015. So here we have some little differences compared to the smart money confidence, but right now and also after the COVID crash it was pretty exactly like a mirror. So the smart money confidence was very high while the dump money confidence was very low, and this is exactly what we are seeing right now. And we can also see in these cases right here that normally when the dump money confidence is this low, the price has gone or has moved back to the upside, and when the smart money confidence is that high, then also the price is going to continue to move back to the upside. Then also we have the fear and greed index. You probably know the fear and greed index from the crypto market. Right here we are back into the extreme fear levels. We almost never have left them really much. You can see right here we have some days or weeks sometimes where we are making a little bounce to the upside, but then getting back into the fear or extreme fear levels. This one right here was of course a very fast bounce, just 2, 3, 4 days into the neutral and fear levels, and then directly gone back into the extreme fear levels. We also have the same right here for the stock market. This is even lower right now. This is at 17. You can see this update right here is from Friday. Here we also have extreme fear levels, course, you know, the fear and greed index is a contrarian indicator, so that means if there is extreme fear in the market, then probably this is going to be bullish or very bullish. But right now with here the smart money confidence, we can also see that the smart money in the market is extremely confident about this situation, while the dump money is extremely bearish or unconfident, which is also showed in this fear and greed index in the stock market and also in the crypto market. So from a sentiment perspective, I think the view is clear that this is pointing out towards extreme bullishness. But let's also take a look into the market data. And first of all, as always, let's take a quick look right here into the buyer index. You can see that for a very long period of time we are moving basically sideways right here. Not much is happening, not many buyers are joining the market or leaving the market. We of course had a new all-time low right here that bounced back to the upside very quickly, but in the meantime we had buyers joining and leaving the market. But you can see right here not very many, still stuck in the sideways range. And right now we can see a little, let me zoom in right here. Right now we can see a little increase right here. We not have left the sideways range right here, so you can see currently we are here at this point where the red line is. That is at the minus 54.3 level. So far also not a big increase, not have left the sideways range right here. So currently here in the buyer index not much is happening. We can, as I said, we can see that some people joining and leaving the market, but there is just very little action right here, which is also representing the current market stage. So there is not much interest right now to join the market, and that is also what we can see right here in the buyer index. So not much is happening right here. Then also what I also want to show you right here is the Nasdaq data that I have also shared for the first time right here on my Patreon some days ago. At the 26th of February I have shared that the first time, and here that is the Nasdaq data. So that is also some market data that is also self-developed. So this is also a self-developed indicator, but not for the crypto market. And if you're asking yourself right now, okay, why do we look at Nasdaq data and not at crypto data? I want to know what's going on in the crypto market. Then it is just simply because of the reason, probably you already know this, is that the Nasdaq or the stock market and the crypto market right now are very correlated, and it would be unlikely to see that, for example, the stock market is going to rally and the crypto market not, or that the crypto market is going to rally and the stock market is not. Of course, they are not moving exactly the same. We have seen this right here in the Nasdaq chart and also in the Bitcoin chart, that they are not exactly the same, but they are very correlated, and that is why we are also taking a look into the Nasdaq data right here. And this one right here, so the blue line that you can see is the price, and the green line right here is, we call it the buying power. And here in this picture I have marked 4 points. You can see it right here, 1, 2, 3, 4, and I have also listed it right here. And the first point that I have marked is after the COVID crash. Let me also put that up right here. So this one right here, this is after the COVID crash. Then I've also written right here at which levels we are, so at 37.6 levels. The second one is on the 22nd of September 2020. There we were at the level of 49.8. So that is this one right here. So after this price fall right here, then the 3 that is right here is on the 5th of March 2021, and there we saw a buying power level of 63.5. so that is this one right here. And then we have the number 4 that is right here, and that is at the 12th of May 2021, and there we saw a buying power level of 49.4. and currently you can see it right here, I've marked that we are at the 50.3 level. So that is not the highest level we have seen, but it is a very high level here if we compare that to the past. And here the highest levels, you can see it right here. I think I've also written that right here. Some days ago we were also at the 66.1 level, and that is one of the highest levels we have seen in this index. And right now we are decreasing again, and what we want to see right here is that we have our highest points and then decreasing again, because that normally means that then the buying power is unfolding, and that normally means then also that the price is moving back to the upside. And if we are now counting 1 and 1 together, so when that means that the stock market is going back to the upside, that then potentially also means that the crypto market is going back to the upside. So this update right here, as I said, is from the 26th of February, but I also have one right here that is from yesterday, or basically right here in the Nasdaq data that is from Friday. So right here, the 4th of March, so 2 days ago. And here you can see that we are also going back to the upside right here in this index. What so far is not something that is bad or dangerous. You know that in the markets we are moving in waves, and that is also the indexes are also moving in waves. So this right here, you can see we had a, let's call it, strong move to the downside, and then also a move to the upside is something that is just likely and normal. But ideally what we want to see is that over time right now we are starting to decrease. So something like this right here, you can see right here we have also ups and downs and ups and downs, but in general we are moving to the downside right here and unfolding the buying power while the price is going back to the upside. So that's of course what we would like to see, but so far it is definitely too early to judge this. It is of course very nice that like for 1 or 1.5 weeks right now we don't have seen a new high right here in the buying power. That is a positive sign, but it is too early to judge if that is really right now the start of the move, of the downside move in the buying power, and therefore then also the start of the upside move right here in the price. That is too early to judge, but in general we can say that also this data right here is looking good. So right here you can see these levels right here are also levels we are seeing just very rarely, and this data right here is looking good. Also the buyer index data is looking good, but for a longer period of time right now. But what we can also see in the buyer index is that there currently is no interest. So what I would like to see right here is that we are increasing in the buyer index and that we can see some buyers joining the market again. And right now of course this is more bullish news or more bullish data right now. But let's take a look into the invasions and also into the wars. But right now probably you're saying, okay, we have a very dangerous overall geopolitical situation right here, and that is why I also want to take a look into data of this. Of course I'm not an expert in geopolitical stuff. That is why I can just show you some data, what has happened in the past after such events, and I would say let's look it up. The first thing right here is I have seen that on Mark DeMesel's noise.cash channel right here. He has shared that from Ryan Griffin 2, and he has taken a look at charts after invasions. You can see right here the first one is from 1964, Gulf of Tonkin incident. Here that is the invasion, and you can see price after the invasion. Here we have the Gulf War. You can see that right here, that is the invasion, price after the invasion. Then right here we have the Afghanistan War. Here that is the price by the invasion. Here you can see that after that it's going more to the downside, and here we have 2 more, and also here after the invasion price is going to the upside. So we can say right here that 5 out of 6 times after the invasion, of course we have everywhere this panic move to the downside, but these panic moves normally, or here in every case, are getting bought and the price is going back to the upside. But in 5 out of 6 times that is also for a longer period of time, and here we have 1 out of 6 times where we just have seen a bounce and then more follow through to the downside in the price. So that is regarding invasions. And also right here I have also taken a look at World War I and World War II. So what has the stock market done in this period of time? And here that is World War I. You can see right here where the red arrow is. I have also written it right here, World War I start. So you can also see right here, panic move to the downside, and then a rally in the stock market. Right here, there is the end. World War I is ending. That is right here. And from start till the finish, we have an increase of 50, let's round that, 59%. That is World War I. And then right here we have also the Second World War. You can see right here, first in the Second World War we have a move to the upside, but then continue to move to the downside for some time. You can see right here, World War I start, and in April 42 we have reached the bottom, so in the middle of the war, and then the prices are just continuing to moving back to the upside very strongly. And here you can see it right here, here is the end of World War II. And if we are comparing from start till the finish, also here we have 25.88 or 26% increase, but here in this example of course we also have more downside. But in general, what are these data showing us, or what is this data telling us? And this data is telling us I would say a very sad fact, and that is that war doesn't mean that the stock market or the crypto market is gonna crash immediately or is going to crash very hard. In most cases it is the opposite, and that's of course a very sad fact, but it is what the data is telling us. You can see right here, 5 out of 6 times by invasions we've seen long-term gains in the stock market. And then right here in the 2 world wars, from the start till the finish, we also can see that we have an increasing stock market. In the first one we basically, so you can see it right here, in the first one we basically just started directly with a rally. In the second one we had some more downside and then also started with a rally. And as I said, that is of course a very sad fact, but here also we have to do our best to let our emotions aside. I think we can all agree that nobody wants a war, except for some people that value money over everything else basically. But that's it in regards of the war topic. I have also 2 more things that I want to show you, and that is first something that we are taking a look at for a very long period of time. That is the Bitcoin dominance. You can see right here we have a strong move to the upside, but currently we are losing a little bit again. That would be of course very nice if that is continuing, but so far of course we have to wait for this. But you know, I'm not expecting an alt season before we are going here back to the downside, so below the 39.6 level. And you can see right here we not just need a dip below it, we need a confirmation that we are below it, and then very likely we will see our alt season that we are waiting for. And then there is also the FOMC meeting that is on the 15th and 16th of March, which could be an important news event because very many people are waiting for what the Fed is going to do, if with the current situation, so like also the geopolitical stuff and also everything else that is going on in the market, if they will keep their policy or if they are becoming a little bit more dovish. So that is what probably the market right now is waiting for, and that is on the 15th and 16th of March. So potentially till that point, I have also pointed it out right here in some Patreon update, that potentially till that point we will see something like this right here. So ups and downs, strong moves to the upside, strong moves to the downside, but no real direction. Or here like in the crypto market, strong moves to the upside and then losing it all again. But that till the point till this meeting is over, or till we have more information from this meeting, probably not very much is going to happen in a certain direction, or that we will not have much clarity till that point. And then in the end, of course, the question is that the data that I have showed you right here with the dumb money, smart money, the sentiment, the invasions, the wars, the Nasdaq data, the crypto data, so that everything, or everything that I've showed you in this video is pointing out towards a bullish direction. Of course, there are also bearish signs. So that is, of course, there are also bearish signs and there are also bullish signs. But right now, from my perspective, is what we can see that there are more bullish signs than bearish signs. And there's, of course, the question, can this be wrong? And in general, also, if 100% of the data or everything is pointing out towards a bullish direction, of course it can be wrong. And also if 100% is pointing out to a bearish direction, that can also be wrong. And that is what the financial market is about. You don't know if the price are going to increase or decrease, even if all your data is bullish or bearish, or the most is bullish or the most is bearish. You can't say with a certainty that this is going to happen. But what you can do is you can take a look at the overall situation, at the data that I have showed you, for example. Of course, you can also take a look at several other data sources and several other data, chart analysis and all that stuff. And then you can say, okay, what is the probability? And from my point of view and from my data that I have showed you also in this video, we have more probabilities of a bullish case than of a bearish case. And that is why I'm still sticking with the bulls. You know that especially in the crypto market, I'm also sticking with the bulls in the altcoins. But as I said, very likely we will not see that until the Bitcoin dominance is dropping here below the 39.6% mark. So that was a very long video today, and I hope I have put in everything that is answering all your questions. In case there should be any more questions, then just feel free to write them down in the comments. In case this video was helpful, then please leave a like. Also make sure to subscribe to this channel so you won't miss out any future update videos. And don't forget, in the next time, very likely just a 10k crypto portfolio updates will be released on my channel, but in like 1 month or so that will change, and then I'm trying to become more active here and not just on Patreon. But till that point, I'm very active on Patreon. You can also check out that is the first link in the video description. And that's it for this video. See you in the next one, and as always, have a nice day.